So /CL here. Crude oil is up 143. That's a big move. That's a 2% up move. Had some really big candles in crude oil really for the last 4 or 5 trading sessions. IV rank of 95. Now, it's interesting, IV rank on a futures product. We should actually discuss this. How do we get IV rank on a futures product? Because each expiration of a futures contract is its own product. So how do you get a 1-year period of implied volatility and create an IV rank on any futures product? Well, you really can't. It's impossible. So what they do is anything that has a ETF equivalent, which crude oil does. USO is the essentially the ETF form of the crude oil futures. It has a IV rank of 95.7, so /CL is going to be assigned that exact same IV rank. You can see that's how Tasty handles that. Many platforms, you're just not going to get an IV rank or IV percentile or anything like that, because again, it's, you know, each expiration is its own product. It's there's no real way to calculate that with the futures themselves. If you have an ETF equivalent, though, for example, you know, something like the Bitcoin futures. I mean, where are they getting that IV rank? Probably from one of the Bitcoin ETFs now that they've been created. IBIT, it's not IBIT that they're using. Now, IBIT is spot Bitcoin, not the Bitcoin futures. I need BITO, I bet, is the one they're using. Yep, BITO is where they're getting that IV rank, 19.8, and /BTC is 19.8. Well, it just ticked down in both of them to 19.6. I mentioned that because anything that doesn't have an ETF equivalent, you're actually not going to get an IV rank on some futures products like Ethereum. We're about to get some Ethereum ETFs, but right now, you know, you're not going to have any kind of IV rank. There's just no way to calculate it again on purely a futures product. The Mexican peso, I guess there's no Mexican peso ETF. You know, gasoline, also, there's no gasoline ETF. Hogs and cattle, you know, there's nothing here. Oddly enough, copper, HG, does not have an IV rank, but there are some copper ETFs. I know CPER is one, you know, 54.2. So even if it doesn't display, if you happen to know a product, you can kind of get what the IV rank in some of these are. I don't know of any ETF, though, that is built around cattle or hogs. Anyway, but CL having a big move, obviously, that's kind of been the story really in the last 5 days or so, leading up to, you know, we kind of got a heads up that something was about to go on, you know, and oil really started moving. And then, you know, once the bombs started dropping, you know, oil has been all over the place. So yesterday I entered a new position because the IV rank is so good in crude oil. I wanted to do something, so I sold a strangle. Didn't go to CL. CL's a little too big. I could have done an iron condor in CL, but I wanted to do, I prefer to do a naked strangle rather than an iron condor. And MCL, the micro crude, does have options. Open interest isn't great, but the bid-ask spreads are not bad. It's very similar to MES in that aspect. As far as MES, you know, if you look at open interest, you know, you think it doesn't trade, but, you know, the bid-ask spreads are not bad. There are a lot of course, market-making firms out there ready to take the other side of your trade. I have traded MCL a little bit in the past. It's okay. You know, not the greatest product to trade, but it's not bad. So I entered a strangle. I go back to the positions tab here. 10 delta put, 15 delta call. So obviously leaning a little bearish here. And of course, that makes sense why I would be leaning bearish here. We're at the way high end of its range. So I leaned a little further in on the put side, or on the call side, than the put side, which is often what you do in commodity products. Unlike index futures like the ES and the NQs, you know, stocks, you know, where's the risk for those things? Mostly it's to the downside. You're always worried about things crashing down. Well, with commodity products, you know, what's the big thing that you worry about? You worry about a spike in price with things like, for example, crude oil, or what we're seeing in gold, this crazy run up in gold, and silver, you know, doing big things right now. Yeah, a lot of times with the non-equity futures, the real risk is to the upside. But you have to be careful on these things. But micro crude, the product itself is not terribly large. If I go into the active trade here, I go to CL. The notional for CL is 1,000. So that's the multiplier in CL. MCL, I believe, is a tenth that size. Yeah, the notional is 100 rather than 1,000. So 1/10 the size of CL. Now, what do those mean when we talk about the multiplier in futures? Well, whatever the price is, multiply that by the multiplier, and that's what you're really working with. So in CL, you would take 70 and times it by 1,000, and that's the notional value of that contract. That's the real value if it went to zero and you had a long contract in that. That's what you would potentially lose. So 70 times 1,000, of course, it's a $70,000 contract. MCL being a notional or a multiplier of 100, we're only dealing with $7,000 contract. I know the futures can be confusing. Mostly, though, it's not that confusing because most of us trade just a few of these futures products. Like, I couldn't tell you what the multiplier is in soybeans or live cattle or even the Japanese yen, the things I don't typically trade. I maybe have traded a couple of times ever. I've traded probably all those products before, but so infrequently, I couldn't tell you anything about them. I can tell you all about, ES and NQ and the micro ES and NQ. I trade those all the time, right? And CL, MCL, GC, those are the products, you're much more likely to trade anyway. And if it's a situation where you're trading a futures product and you don't know the multiplier, you don't know how big the contract is, just do what I just did. If you're in TASTYTRADE, for example, go to the active trader tab. This is where you would actively trade, like trying to scalp futures, but you don't necessarily, we're not trading it here. Just go to the sidebar for whatever futures contract you're looking for and find the notional, times it by the price, and that'll tell you how big that thing is. For example, /NQ. Well, let's actually go to NQ here because I need NQ in the sidebar. If you're wondering how big the NASDAQ contract is, currently trading, we'll call it 22,000 even. The notional is 20. So you take 20 times 22,000 and you're dealing with a gigantic product, right? So you would be dealing with what, 440,000 notional value is the value of that contract. That's a big product. If you were thinking in terms of stock, that would be the stock options. Obviously, all options and stocks represent 100 shares. So a $440,000 contract in NQ would be like trading something that was, what, like a $4,000 stock? Yeah, big product, big boy product. Sometimes you just get unlucky. For example, solar stocks. And this is when this whole sector has been beaten up ever since the election because Trump is going to push more traditional kind of energy sources like oil and gas and, all of that. Nuclear potentially. Solar has always kind of been a fad, really for years. But at some point, the solar stocks, especially like 2-3 years ago, they really were on a tear. First Solar, In-Phase Energy, those two particular stocks. I mean, they went from like single digit share price to like $300 and something a share, both of them, like In-Phase like $350, $360 a share. You see First Solar middle of last year before the election, it was traded all the way up to $306 a share. Just crazy run up. And they've come crashing back down to earth really ever since it kind of became apparent how the election was going to go. And then after the election, they just continued that same trajectory. Had a little bit of a bounce here in First Solar. I don't know if that was earnings or whatever, but now there's some kind of legislation, I guess, that is not necessarily something that's favorable for the solar industry. So based on that news, you can see First Solar fell almost 20% today. It's a huge move, right? You can see down $33 in a day. Sometimes you get unlucky picking a stock, an individual stock. I mention that because I very nearly got unlucky. Yesterday with you guys, we looked at In-Phase, and I mentioned In-Phase has always been like the worst thing I trade. I've traded In-Phase many times, dozens of times over the last, 3-4 years or so, especially, when it had the big run up, and then as it's been coming back down. I played it a lot. I've never really been able to make money in this thing. It's like most of my trades are losing trades. Overall, I'm definitely in the red on in phase. It's very hard to squeeze money out, especially when you're playing strangles on it. It's just very, very tough. So a few months back, I think I told you guys I was going to quit trading this. Traded it all the time. It's like, I got to quit trading this. This is not something that I can trade. Maybe some people make money in it. I can't. Yesterday, because of the IV rank, I was very tempted. The fact that it doesn't have earnings coming up soon. I went in here and I thought about potentially selling like a strangle, like 14 Delta Strangle. Really good credit, decent buying power reduction, not great. I mean, for this low price stock, it's actually kind of high. But I very nearly sold that strangle because I needed to put some money to work. And, I was at the last second, I decided not to because, hey, DT, you said you weren't going to trade this thing anymore. You're about to go back on that, on your word there. So I didn't pull the trigger on that, man. Had I actually sold that strangle, because that strangle would have been very different yesterday, because this is where it's trading at today, $35. It was trading at $45 yesterday. This thing is down 23% in one day. And you can see this is off the lows. First Solar was also off the lows, right? They actually traded even lower than where they're trading at now. So thankfully, I didn't get caught up in any of that. But again, this is not necessarily a skill issue. Trading a lot of times is there's some luck involved, right? Sometimes you get very unlucky on the things that you decide to trade, or sometimes you get very lucky. Obviously, if you had long puts on any of that stuff, right, you made a fortune.